time are we on? Cool. Let's set it live. Okie. We are live, gentlemen.
Sweet.
So just putting up the chat, putting up the participants. Hey, Adam, here you go. Okay. Hey, Brian. Hey, Scott. Thanks for joining me, gentlemen. How are you doing?
Very well, thanks.
Doing good.
Good. We'll just give it a couple of minutes for everyone to filter in. But we know this is the second session with Causal. If you haven't watched the first one, I'll make sure you grab it and link up in the chat. But we're going to be diving into some more financial models and some awesome stuff that you can do with Causal. So if you haven't seen it, let me know in chat. And if you're coming back for the second session also, let us know. Any questions, make sure you ask them in the Q&A, or you might be able to pick them up in the chat as well. Just Q&A tab makes it easier to keep everything organized. Tamer, do you want to do a quick introduction to yourself? Then Taylor, you could do an introduction to yourself, and then maybe we'll just dive into a quick high-level overview of Causal, and then we can get this underway.
Sounds great. Hey, everyone. My name is Tamer. I'm one of the founders of Causal. Just a bit of background on the company. We've been working on Causal for just over a year now. Our product is essentially a financial modeling tool. Most of our users and customers use it to build financial forecasts to help make decisions about their businesses. And that's kind of what we'll be digging into today.
Nice. Over to you, Taylor.
Hi, I'm Taylor. I worked building financial models for companies for about 20 years. I run Foresight, supplies tools and templates to build models. And I build models in mostly in spreadsheets, but increasingly on a wide variety of web-based platforms as well, including Causal.
Nice. So I'm very much an amateur in this field. So what I'm going to do, I am just going to hand over the conversation to Tamer and to Taylor to actually give like the overview of everything, and then just take this session, and I'll be here to field questions. So if you've got anything you want me to ask, let me know, but I'm now going to hand over to the guys to do what they do best.
Awesome. Sounds great. Thanks, Tom. So to get started, I think it would be helpful just to give everyone a brief sort of intro into what Causal is, what it actually does, and then we can start talking about financial modeling and how companies should use models to make decisions. I'll just quickly share my screen and show a couple of examples. Can you guys see my screen? I'm going to guess that's a yes.
I can.
Okay, awesome. So this here is a very simple example of a model built in Causal. It's a Runway Calculator for an early stage company. Essentially, once you build a model in Causal, what you end up with is this sort of interactive dashboard view of your model. It shows some visuals here at the bottom. It shows a chart and this statistic visual. And then it shows the different assumptions of your model up here at the top. And so for a simple runway calculator for a company, the assumptions are things like the starting cash balance and the headcount and expenses, and also a very simple hiring plan of how many employees are going to be hired over the next few months. And as I mentioned, this is actually all interactive, so you can change some of these numbers to see what happens in different situations without any chance of accidentally breaking anything. So if you're running this company, you might be interested to see, well, what if we bump up everyone's salaries to maybe 7K a month? And you can change that number. Causal will rerun all the calculations, and now you can see that, okay, if we increase the salaries, we lose a few months of runway. And so this is a safe place for people to play around with the numbers. Another couple of things that Causal does, the first is that we let you work in terms of ranges. So when you're building these kinds of models, you're often not sure exactly what some of the values are going to be. For example, you don't know exactly what your expenses are every month. It kind of varies from month to month. And so in Causal, you can use ranges like 1,000 to 3,000. And then what we do is kind of show you what the equivalent range is for your output. And that's where this 35 to 37 months comes from. It comes from these ranges that we've defined. So this is a really simple model, but you can actually use Causal to do pretty much arbitrarily complex things. So this model is the revenue model for a business that has some products and some services. It has a pro product and a business product, and also sells some services on top of that. And in this dashboard, we have a bunch of different visuals, massive table of various metrics. And this model is actually connected to a bunch of other models as well. So this is the revenue side of things. There's also a model for this company's expenses and their staffing. And then these all flow through into financial statements for this company. So it's all linked up to the balance sheet and cash flow statement and P&L. And so you can do pretty complex things in Causal by sort of linking different models together. And there's a few other bells and whistles as well, which I guess we'll probably dig through once we actually get into building a model together. Does that all kind of make sense?
Makes sense to me. So I guess if it makes sense to me, then it makes sense to other people. But if you've got any questions that you'd like to know, then yeah, just let us know in the chat.
Awesome. So I'll stop sharing my screen there. And I thought it might be interesting and useful for everyone just to kind of hear a bit about the value of financial models and how companies should actually be using these things to make decisions. So Taylor, you've obviously seen pretty much all there is to see in the world of financial modeling over the past couple of decades. I guess a lot of the audience might be early stage startups. And one thing that we've actually heard from a lot of companies that we've chatted to is that a lot of folks kind of feel like, you know, for an early stage company, there's just so much uncertainty that there's not really any point trying to do financial modeling. Where do you think the value is in sort of financial models for early stage companies?
Well, I mean, if you want to, the short answer is like, yes, financial models are usually wrong, right? And they're usually wrong in the sense of like what you actually type in the numbers. Not what usually actually comes out in practice. But I mean, I would say that's not the goal of most models. The goal of most models is to help you understand how you want to make decisions. And so from that point, like you can use numbers and a model to help guide the decisions you make, independently of whether the model itself is exactly the same as going. And really, it's about like reality is going to change constantly as you actually implement a product, and you have to have a way to structurally analyze the choices that you're going to make in terms of the decisions you're going to make, and that's where models kind of come into play. That's a big reason why Causal comes in as well. It's being able to understand the variability and probability associated with those as well.
Got it. Yeah, that makes a ton of sense. Yeah, I mean, internally, we're a very small company right now. We're like 3 people, but we have a few simple models, for our runway and to make decisions around pricing and stuff like that. What do you think are sort of the turning points in a company's journey where I guess the seriousness of their financial modeling kind of has to level up? Like, at what point, for example, would Causal need to start having financial statements and things like that?
I mean, people have to do financial statements from the very beginning, and people will often build a financial statement at the beginning just so they can understand cash and cash position of that. I think of it as more of there's a progression of stages of areas you have to care about in terms of complexity. So the various early stages, like doing a revenue forecast, is going to be incredibly hard, right? And just the act of trying to create a revenue forecast and the act of trying to create assumptions can be impossible for some people to do. But creating a cost budget and a plan for how you're going to hire and the expenses you're going to have over time, those are things you can control. And so you can have a very deep idea of like how you're going to actually execute that from very early stages. And so then as you kind of progressively, grow, scale, grow larger and add team members, I think the scope of what you care about forecasting is going to change over time, right? As you continue to develop more complexity around how the specific mechanics of your business model works, you can get increasingly more detail in terms of how you do that, right? So you may, at the very beginning, if you're just selling something online, you just may care about orders and average order value.
Right.
And you may care about like repeat purchases. You may care about customer acquisition costs. And eventually later you think, let's think of like cohorts. What are people actually purchasing? What are they doing? Those sort of things. And that's something you're going to care about the various beginning stages. But as you kind of grow to raise more capital and have increasing demands from external parties, your investors, and increased capability of your team to just more data to understand and actually be able to make statistically significant decisions from, but also more ability of the team to actually execute on decisions from them as well. I think just kind of progressively grows over time.
Okay, yeah, for sure. Yeah, that definitely makes sense. And from like I guess you worked as a VC and you sort of dabbled in investing now. From an investor's point of view, how do you kind of see, you know, if you're looking at a company, how do you kind of view financial models as part of that process?
I do it like at the very earliest stages. So I'll say like when I look at models, I use it more as a way. The first kind of check I go through is like, does someone understand the business they're in, right? Or do the metrics they're showing, does it make sense? Do they understand like a business in general? And then two, it becomes, do they understand the real world and operational complexity necessary to execute these things? Does the numbers match? Does the quantitative numbers match the qualitative strategy they're discussing? Right. And sometimes I don't really care about like whether the actual number is itself, but it's more like, if you believe this thing about the business and the numbers you're showing, do you understand what that actually means in terms of the business you're building, in terms of the team you're building, in terms of how your change of margins are, in terms of how cash is? And to me, it becomes a check to see like, are you thinking about the business in general? I don't necessarily, if someone builds a model and they project say revenue in 3 years is $15 million, I don't really care about whether it should be 15 or 10 or 5 or 25. What I care about is the thinking of how to get to there. Does the actual stuff make sense? Does the rates that one has to assume, does it make sense given what happens and exists in the marketplace, right? So it's more like a check, right? It's a way to have a conversation with someone about a business and use the numbers to check how they're talking about it. Yeah. And that's really kind of like the more valuable and important way to talk about it, like models and conversations about business.
Okay. Yeah, that makes a ton of sense. Yeah, I guess the model is more of like a representation of how the founder thinks about the business. And I guess the specific numbers that come out of it are probably less important in that conversation.
Well, that's why understanding how things work is an important part to it, right? That's how like being able to understand, like I always think about like a model is at some level, all businesses have equation underlying it, right? There's an equation there being, can I properly acquire customers and keep them around long enough to earn revenue off them at large enough to pay for my fixed costs, right? In general, right? And there's some version of that equation underlying almost any business out there. And so like, what I really like look for in terms of a founder is, can they take all this complexity that exists out there, and can they condense it into like a really solid kind of way and think about it? And so I guess that's the important part of the conversation. And that's why like models that are built in platforms that allow people to kind of change and analyze and think about the numbers themselves is a really powerful way, not to talk your book.
Awesome. Yeah, for sure. And so like finally, from what you've seen, from all the various kind of models that you've seen and helped people with, are there any sort of big pitfalls or like traps that people sometimes fall into when building models? Like, what are some things to watch out for?
Well, I mean, but number one, a lot of people fail on the basic thing we talked about before, right? Is do the metrics they may assume doesn't make sense given metrics I know of other comparable companies out there, right? So can you actually get to the level of growth that makes sense? Are there comparable companies out there to even speak to like a relevant kind of reference to what you're looking to do? Building a business, say like people would build a revenue forecast out, and that question comes, okay, do you know what it operationally means to build a business of that size? Like in terms of team and scale and staff, are you thinking about it appropriately? You know, those are things kind of, there's tons of like tactical little things in terms of like actually building a model in terms of details that kind of come out. We see like tons of things, but I try to focus on big picture first and foremost before worrying about some more like structural things.
Yeah, that makes a ton of sense. Okay, sweet. Thanks a lot for that intro. Hopefully that was useful for some of the folks listening. I think it'll probably be interesting to dive into Causal as a product now and actually build a model together live while I share my screen. So I'll go ahead and do that. How are we managing questions, by the way, Tom? I can see some activity in the chat.
Yeah, so we have a question from Ali. I didn't know if we wanted to answer this now, or we could leave it to as we start to tuck into building a model. But Ali asked, can Causal do probabilistic financial modeling when it comes to modeling uncertainties with distributions like P10, P50, P90, and use Monte Carlo simulations?
Got it. Thanks for the question, Ali. The short answer is yes, it can, and we can dig into some of the details around that while we build the model. So I'll share my screen once again, and we can dive in. Cool. I'm assuming you guys can see this. Cool. So let's start off by making a new model in Causal. We can call it a SaaS model. So let's pretend that we're running a SaaS, a software as a service business, and we want to build a financial model to understand the different dynamics of our business. So this is kind of the blank canvas that you start off with in Causal. Causal as a product is a bit like a spreadsheet. You can pretty much build whatever you want in it. A few things are different though. We don't have a sort of grid layout where you can enter numbers into these cells. Instead, you construct your model using these things that we call variables. And so, if you're a SaaS business, probably the core of your business is the subscribers who are actually paying for your product. And so maybe the first variable we want to create is the number of subscribers that we have today. And so we can create a variable, we can give it a name like current subscribers, and maybe we have 100 of these today or something. So this is our first variable. Every variable can have a name and a bunch of other attributes like a description, a value, and then there's formatting options and things like that. And we'll dig into some of those other things a bit later on. So we've got our first variable. It's the number of subscribers that our business has today. We also probably want some kind of money component to this. These people are presumably paying us some money. And so maybe we'll have a variable for our sort of revenue per user. And maybe our product is priced at like $50 a month. So right now we have 100 people paying us $50 a month. Next, I guess when we're sort of trying to project this business into the future, we'll probably make some kind of assumption around the growth rate of the business. So this kind of ties into what Taylor was saying earlier about like making realistic assumptions. So if we're a very small software business, it might be reasonable to have growth rates of 10 or 20% a month. Whereas if we're a much bigger business, then maybe growth rates of 10 or 20% a month are too ambitious. And so for now, let's assume something like 10 to 20%. And linking to Ali's question, one of the nice things is that Causal does let you deal with probability distributions. So we don't know exactly what the growth rate is going to be, and we can actually just write an expression like 10 to 20%. And now Causal under the hood is turning that into this probability distribution where it's more likely to be around the 15% than it is to be on the 10 or 20% boundaries. But under the hood, we're actually running thousands of simulations to work out the sort of ranges and all the different calculations. And so once we start using the growth rate in the formulas, the simulations that we're running will tell us the sort of distributions of the other variables. Hopefully that makes sense. Taylor, please do kind of butt in if if I'm explaining something poorly. Let's write our first formula to actually do some calculations. So we've got our current subscribers and we know what the growth rate is. Using these two things, we can now work out how many subscribers we'll have in each month going into the future. And so we can create a calculation variable called subscribers. And here we can write a formula to do that. And so if we think about how this formula needs to work, to get these subscribers in the current month, we want to take the number of subscribers in the previous month and increase that by this growth rate. And so in Causal, we can write a formula that very directly does that. We can say, okay, subscribers equals subscribers previous, so subscribers in the previous month, multiplied by 1 plus the growth rate variable. Now, Causal is just telling us that we haven't set a value for this subscribers variable in the first month. So in month 1, there's no previous value that it can access. And so we can actually specify that in month 1 of our model in September 2020, we want to use the current subscribers variable. And so now what we've done is we've sort of completely defined subscribers by saying, this is the value in month 1, it's current subscribers. And then this is the value in all the subsequent months. And then we have a formula for that. And you'll see that Causal has now shown us like a preview of our subscribers in every single month going into the future. And this range of the growth rate has led to a range in the number of subscribers. And we can see that a year from now, we'll have between 300 and 700 and something subscribers. And so this is our first calculation variable. And we can easily plot that on a chart. Hopefully that all made sense. Taylor, from a sort of spreadsheet point of view, how do people sort of handle things like uncertainty around a growth rate? Like if you wanted to be able to see this kind of range in a spreadsheet, what would you actually have to do?
Well, I mean, to create something like, so there's easy ways and hard ways, right? And the easy way is you structure inputs like that. You draw the chart, and then you just change the inputs and see what the actual result is. And that's still like a stochastic model. It's like a one view, and you're just kind of altering the input to get the results. But it's not creating a structured way to think about the kind of ranges are a part of that. And the second part is actually do the calculation multiple times. So create 3 lines for 3 different growth rates for 3 different inputs.
Okay.
And then graph each 3-1. That works for small sets of data, small sets of analysis, but it's impossible to do for like large full models, right? It's impossible to do that for carry through an entire model. So then you have to start doing scenarios for it. And most times you build like really complicated, detailed scenarios to look at a range of values. You end up having to use some sort of a scenario tool to just kind of outside of kind of core Excel tool sheet.
Okay. Yeah, that makes sense. And so do people like
It's easier.
Yeah, thanks. Hopefully this is easier. Do you see people doing these kind of scenarios often, or is it sort of so cumbersome that most people just don't bother in spreadsheets?
Well, more the latter, right? Because like I think most people don't think about inputs in terms of ranges, right? They see a cell in a spreadsheet and they figure what number should I put in the spreadsheet. And to think of a range means, okay, I need to have multiple cells to create a range of inputs. And I think most people struggle to think about the world like in terms of ranges. And so they don't really do it. And then if you actually do want to do it and can think about it that way, it's a difficult thing to actually do in Excel. It takes a lot of structured thinking and structure in terms of how you present and build a model to be able to do that sort of thing to begin with. Most people do get to the point where they're able to just like, hey, assume an input and then vary the input to see how it results. That's standard, common, like good Excel spreadsheet kind of building, right?
Yeah.
But going beyond that doesn't always get done because it gets harder.
Yeah, for sure. That makes sense. Yeah, I mean, on a philosophical note, the idea of working with ranges is kind of something that we hope Causal might be able to take mainstream. We think it's great that, people are being data-driven and being quantitative about making decisions. But it feels like the next level on top of that is being able to have an idea of how confident to be in those decisions that you're making using these models, and being able to account for the uncertainty by using these things like ranges. Hopefully helps people with that. So we strongly believe that it's good to think about things in terms of ranges and probabilities rather than fixed values.
But if I can add onto that, the one thing I'd add is that most times when people do this, they'll think of it in terms of discrete scenarios, right? So say you have 5 or so variables in a model, and you think through a scenario of 5 different variables.
Yeah.
What you often don't see is the interaction effect of the ranges, right? You can assume like, hey, here's a best, medium, worst case based on these assumptions.
Yeah.
But what you don't often see is the interaction effect of the ranges. And that's what creates even more variability outside of the actual kind of things you may see. I think that's what, like, that's the even like other additional layer in terms of thinking through ranges. That doesn't always kind of come through in terms of building models.
Got it. Yeah, for sure. I think the approach we use of running these Monte Carlo simulations is really the only kind of rigorous way to handle this kind of stuff. There's lots of interesting examples of where, if you do things like best case and worst case and kind of average case scenarios, in general, all of your average case assumptions will not actually lead to the average outcome. The average outcome is often affected by some of the more outlier cases in some of your variables. And so simulation is really the only way to actually get a rigorous result for what the final range in your outcome is going to be. We have a blog post about that on our blog, which I'll circulate around maybe after the call. But let's crack on with this model. So we've got our subscribers, and I guess this is the subscribers in the current month. Now, given that this is sort of a SaaS business, we're probably interested in modeling things in a slightly different way, where we can account for how many new subscribers we're getting each month and things like that. And so instead of having everything just baked into this calculation, we probably want to split it out so we can see, which are our new subscribers, which subscribers are churning, and things like that. And so it might be helpful to create a variable for new subscribers. And I guess that we can sort of define this growth rate as like, what percentage of our existing subscribers would then be added as new subscribers each month. And so in that sense, the formula for the new subscribers in the current month would be the subscribers in the previous month. So we can say subscribers previous times the growth rate. And so now we can kind of have this thing for new subscribers. And now instead of just having this assumption here, each month, what we can do is take the previous number of subscribers and add on the new subscribers to get the sort of total subscribers. And the numbers obviously work out to be the same because essentially it's the same calculation going on. Couple of little bits of formatting. So you can see that the preview for the final number of new subscribers is 72.9. That's a bit weird. You can't really have 0.9 of a subscriber. And so in the formatting settings, we can say that we actually want to limit this to just be integers. And so now everything will be displayed as whole numbers. And we probably want to do the same for the subscribers variable. And now, given that this is a subscription business, you know, even for the best businesses, a few customers are probably going to leave every month. And so we probably want to account for churn. And so we can make a variable for the churn rate of our business. And I don't know, maybe 3 to 5% of our customers churn every month. And so now, in the same way that we worked out the new subscribers, we can have a variable for our churn subscribers. And this would essentially take all the subscribers in the previous month and apply this churn rate to them. So this would be subscribers previous times churn rate. And we just want to make this an integer again. And just to make some of the calculations a bit simpler, we can make this negative so that then we can just add everything up and have everything kind of automatically worked out. So negative 19 here means that there are 19 churn subscribers. And finally, we just need to account for this churn in our total subscriber count. And so every month, we'll take previous month subscribers, we'll add on the new subscribers, and then we'll remove the churn subscribers. And so we'll add that to the formula. And now this should hopefully account for all of these different dynamics. And so I guess, yeah, these are kind of the core categories of a SaaS business. And technically, this is probably something like ending subscribers, so the subscribers at the end of each month.
Tamer, can I just jump in with a quick question for Taylor? How does seeing a model being built like this in this way compare, or what's the feeling you get through your head watching a model being built like this as opposed to in a spreadsheet?
That's an interesting question. So I built a number of causal models, and so like I've gotten accustomed to this sort of kind of structure for it, right? I've used, like, people are very comfortable. I think people are very comfortable using spreadsheets, and I think we're used to kind of that structure in terms of, like, you know, typing numbers into cells in that way. Freeing someone from that structure can take some adaptation, but there's a lot of value in doing so. And there's a lot of ways in which this is a lot easier for people to adapt to using rather than trying to think through a blank slate of a bunch of cells in a spreadsheet. And so for me, it's one of these things that makes me feel like very, almost like freeing in a way, I think is the kind of a simple answer to that. Does that make sense?
Absolutely. Thanks very much. No, it's interesting because I was seeing your face that react to how nicely the model was coming together then. And I was just wondering, like, how you'd reacted to that the first time you'd have seen Causal coming from the spreadsheet side.
Yeah, so I think the first time Taylor would have seen Causal would have been about a year ago, which was right when we started. So Taylor was actually one of our very first kind of beta testers who started giving us feedback. And so we owe a lot of the product progress to stuff that Taylor would tell us in the early days. So he's kind of seen it way before it even looked like this.
Amazing.
But you could always see it being something that was very free and very easy to use, though. So you could always see that.
Awesome. Thanks a lot. I appreciate that. Cool. Let's crack on with the model then. So we've now got, like, I guess the main subscriber dynamics. We have new subscribers every month. We have some subscribers churning every month. We might want to visualize this nicely. What we can do is just drag some variables onto this chart to add them on. Maybe we're actually just interested in seeing the movement in our subscribers. So maybe we don't care about the total subscribers in this chart. We just want to see how many people are leaving and how many people are joining. And so we can sort of remove that variable, and we have a bunch of different chart options. Maybe in this case, it's more helpful to see it as a bar chart so that you can sort of compare the relative size of the new subscribers versus the churn subscribers. And then obviously we have, like, a bunch of customization options, like colors and things. Maybe the churn will be in red and maybe the new subscribers will be in blue or something. And so making charts is hopefully pretty easy in Causal. Cool. I guess we probably want to get an idea of how much money we're actually making. And this is probably one of the main outputs of our model. And so we can get an idea of this by making a variable called MRR. And this stands for monthly recurring revenue. This is a subscription business. And so the monthly recurring revenue of our business would just be the number of subscribers we have at the end of the month multiplied by the revenue per user. And so this will be a really simple formula, ending subscribers times revenue per user. And this will tell us how much money we're actually making. And you can kind of see that here. And maybe we want to show that in a table so we can see some of these actual values. So we've got some MRR. Taylor, what are some other kind of important-ish things in here? I guess we probably want to model out some kind of costs around like customer acquisition, right?
Yeah.
Cool, let's do that. So yeah, these new subscribers, they're not just going to come out of nowhere. You typically have to spend some money to acquire them. And we'll keep this model fairly sort of top down, and maybe we have a rough idea of how much it actually costs us to acquire a customer. So we can make a variable called CAC, maybe give it a description of customer acquisition cost. And maybe the CAC for this particular business is something like $40 to $60. Which isn't too crazy given the revenue per subscriber. We're hopefully making a lot more than $40 to $60 once they're subscribed. So that doesn't sound too bad. But now based on this CAC and based on the new subscribers we're getting, we can get a rough idea of how much we'd actually be spending on sales and marketing to acquire these customers. And so we can make a variable for, let's just assume this is a marketing-based business that doesn't do too much sort of hands-on sales. And so we can have a marketing spend variable which will be our new subscribers times misclick there, times the customer acquisition cost. And now we can see how much we're spending on marketing. And there's probably also a bunch of other kind of expenses that go into a business, things like salaries and stuff like that. And for this, it might actually be useful to connect to some data. And so most companies will typically use some kind of accounting software to track how much they're spending on things and even track their revenue. In our case, we have a sort of example data source from QuickBooks that tracks a bunch of different things. It knows how much we're spending on expenses, and it even has that broken down by different categories. But for now, let's just pull in the sort of total expenses variable from our QuickBooks. The process of actually connecting to data in Causal is pretty simple. We have a few different data connections, Google Sheets, Stripe, and so on. In this case, we'll be using QuickBooks. And if you were doing this yourself, you just kind of click here, you then click a button here that connects to your QuickBooks account. You can select which data set you want to use. In our case, we want to use the profit and loss statement. And then Causal will be able to pull in all the different line items in that data set. And so in our case, we can just click on this total expenses variable. And what it will do is kind of pull that in directly from QuickBooks. Now, at the moment, Causal is telling us that there's a bit of an issue here. It's saying that the data source has data from January 2018 to August 2020, but our model's time settings don't actually have those dates in them. And so in the general tab, you can see the time settings for your model. Every model has a start and an end date, and also granularity. So in our case, the model is monthly. Models can be weekly, daily, quarterly, whatever you want. And so if we just move this date range back to maybe September last year, then we can pull in some of these actual values from our QuickBooks account. And so we've just changed that. And now you can kind of see that Causal is actually pulling in some numbers for our total expenses. You can see in this preview here that it's kind of fluctuating from month to month. And the way the data connections work is that when this variable is connected to data, it'll use the data value when the data actually exists. And when the data doesn't exist, it'll fall back to whatever formula we've defined here. So in this case, I don't know if there's a sensible way for us to forecast our expenses. And so it might just be simplest to just assume that our expenses in the current month are just going to be the same as the previous month. And so we can just select this previous thing. And now Causal will kind of make a forecast based on the previous month. If we wanted to be a little bit more sophisticated about this, we might want to take like an average of the past 3 months or something. And so, yeah, maybe that's actually a better thing to do. We can write a formula that calculates a moving average. And so in this case, the formula would be, I guess, total expenses in the previous month plus the total expenses in the month before that. We can customize which point in time we're looking at. So if we click on this drop down and go on custom and then click on look back, we can write an expression like say T-2 to refer to 2 months ago. And if we wanted to also take 3 months ago, again, we do the same thing. We can access the total expenses at T-3, which would be 3 months ago. And so now we're taking the previous month and the 2 months before that. And I guess we want to divide that by 3 to get an average. And so now you can kind of see that the forecast is slightly changed based on that. And so these are our total expenses that are not related to marketing. And I guess, I guess we want to work out like a total costs variable or something, which would just be our total expenses plus our marketing spend. And now based on the amount of money we're spending and the amount of money we're making, we can get an idea of sort of, I guess, roughly the margin of our business, like how much money we have to spend in order to make a dollar. And I guess, Taylor, I might be wrong on terminology here. Would this be called like gross margin, or like what's a sensible margin metric to calculate here?
More like net income.
Sorry,
operating margin. More like operating margin.
Operating margin. Got it. Okay.
Net income.
Let's call this operating margin, and then this would be like, I guess, the difference between our revenue and our costs as a percentage of the revenue or something.
More or less, yeah.
Okay, cool. So let's do that. So this would be
very loose. We're doing very loose accounting.
Yeah, absolutely. Yeah, this is very simplified. You'd probably be doing this in a much more rigorous way in a real model. So in this case, we'll take the difference between our revenue and our costs and divide that by our revenue to get an idea of our operating margin in each month. And we want this to be a percentage. And so we can format this as a percent, and maybe we want to see this on a chart somewhere. So we can create a chart for that. Looks like we had some crazy months a few months ago where we spent a lot of money, but it's not looking too bad now. The margin seems to be around 50 to 70%, maybe, which is potentially quite optimistic. Cool. So we've got a super simple model here. We've got some things connected to data. This is pulling in from QuickBooks. And we're sort of generating the rest of this model based on assumptions. Once we're done building this model, what we can do is we can present it in a dashboard. This is a bit like the dashboard that we saw earlier when I was showing the product. And this is the version of the model that we might want to share with the rest of our team or our investors. We can send them a link to this URL, and then they can see this dashboard and they can play around with the numbers. Now, I think it might be interesting just to demonstrate a few more of Causal's features before we end. So, as the business gets a bit more mature, we might start to have multiple different products. At the moment, we have a very sort of low price product at $50 a month, but maybe we're interested in also having an enterprise product. And so we'll have like different number of subscribers for each of these two different products. They'll cost different amounts of money. They'll probably have different churn rates and growth rates and things like that. And so actually, Taylor, if we were using spreadsheets, what would the workflow kind of look like if you had a simple version of a model with one product and then you wanted to go in and add a new product that the company sells?
Sorry, you would copy paste basically, right? So take all the calculations, replicate, do it again, and then add it in the other.
Got it. Yeah, that makes sense. So you'd kind of just like copy all of this stuff, maybe paste it into, I don't know, a separate tab or maybe the same tab and just rename things and start changing values. Is that right?
More or less, yes.
Okay, cool. So that's one way to do it in Causal. You could do that, but in general, we try and build the product in a way that you don't have to do too much copying and pasting and you don't have too much duplication to hopefully save people time and reduce the chance of errors. And so we have a feature called dimensions, which can actually automate most of this copying and pasting for us. And so what we can do is we can add a new dimension, and this dimension will be called maybe product type. So we'll now have two different products, and maybe we'll have one sort of self-serve product where people can just sign up on our website, make an account, start playing around, and then start paying us money. And then maybe we'll have an enterprise product where we have to give them a demo, and it's much more hands-on, and it has more features and things like that. And so now we've now defined as dimension the product type, and we've said we have two different product types. Now, what we can do is apply this dimension to some of the different variables in our model. So the revenue per user is probably the most obvious thing that's going to be different between the self-serve and the enterprise products. And so we can go into the revenue per user variable. We can click on this dimensions icon and we can select the product type dimension that we just created. So we can click on that. And now what this has done is that it means that we have different price points for the two different products. And so maybe the self-serve price will stay at $50, but maybe the enterprise version is a lot more expensive. Maybe this is going to be $1,000 a month. And so now this has sort of two different prices for the two different plans. And you'll notice that a few things have kind of started to change in some of our visuals. The MRR is now kind of automatically broken down by self-serve and enterprise. And you can see like how much revenue we're getting from self-serve and how much we're getting from enterprise in each month of the model. So these are two separate sets of calculations that are going on. These probably don't make too much sense right now because we haven't applied this dimension to some of the other things. So we probably want to apply this to the current subscribers as well. We probably won't have the same number of enterprise customers as self-serve customers. We'll probably just have, I don't know, maybe a handful of enterprise customers to start off with. And for now, we can just assume that like the growth rate and the churn rate is pretty much the same for both of those. We probably want the CAC to be different, and so we can apply the dimension here as well. And it presumably costs a lot more money to acquire an enterprise customer. Maybe this will be like, I don't know, $500 to $600. So now you can see that we have two different CACs. And essentially what Causal is doing is that it knows that it needs to do calculations for different sets of values. And so for the ending subscribers, we now, Causal is now tracking the number of self-serve subscribers and enterprise subscribers as separate kind of items. And then the same goes for all the other calculations. They're automatically broken down by whether they are self-serve and whether they're enterprise. And so we didn't actually have to change any formulas to get all of these different numbers. We just had to change some of our assumptions to define some of the starting points for these variables, and Causal kind of handles the rest for us. And so this kind of means that if we do decide to be a bit more rigorous about our model and have a more gap compliant margin calculation, we can just change it in one place and everything will kind of work. You don't have to remember to change it in all the different places where you've calculated the margin. Does that kind of make sense? Taylor, I don't know if you've played around with dimensions too much, so maybe you'll have a good view on whether what I said makes sense or whether there's some like confusing bits going on.
No, I mean the way you explain is perfect, and I knew where you were going when you asked that question in terms
Right.
of launching doing the dimension side, and it's true. Like it is a fundamentally harder thing to say, okay, now do those calculations, now do it all again, and change some things about it.
Right.
And it's a truly powerful way to break it out, because people oftentimes, like this is an example of how you start building a model to do a simple thing first, and you can add in complexity over time. And you're basically built into the structure and kind of how you built it. You can layer in complexity later on with additional products, and you can splinter out different assumptions rates or different things. So you're not forced to kind of do that from the beginning. That's something makes it like pretty great basic to start, and then layer in complexity as you go on, as you kind of grow.
Yeah, I think that's a nice point. Yeah, I think this idea of being able to sort of do things on the fly and kind of adding in more layers of complexity as you go along is definitely one of the principles we have in mind when we're sort of figuring out how to build features and things. I think in general, making big structural changes to models is a bit of a pain in spreadsheets, and we want to sort of minimize the amount of big structural changes you have to do as your model gets more complicated. Just a couple of details around the dimension stuff. Causal automatically has broken down all our charts by the different dimensions. Oftentimes you won't be interested in seeing the chart broken down by dimensions. In this case, you might just care about the absolute number of churn subscribers and new subscribers, and you don't care which product they're from. And so in the chart settings, you can just turn off the dimensions there. And now Causal will kind of just sum up those things. And final point on dimensions, there is a bit of a slightly complicated thing around, if we have these two different sets of numbers for the operating margin, how should we summarize these two different sets of numbers? And by default, the way Causal summarizes things across dimensions is by just adding them up. So to get to get this 200 number, it's just added up the number of new self-serve customers and the number of new enterprise customers. Similarly, to get this 140% number, it's just added up the two percentage margins for self-serve and enterprise. When it comes to percentages, it doesn't really make sense to add them up. You probably want to take some kind of average to get a better sort of summary of what the actual operating margin is. And so in the advanced settings, you can change what we call the aggregation function, and we can say, okay, we should take an average instead. And now it'll take an average of the two different products to get the total operating margin. And so that's just something to bear in mind when using dimensions. Final sort of feature that it might be worth digging into is scenarios. So Taylor, you mentioned this earlier about sort of setting up different scenarios in spreadsheets. We have a nice feature that lets you do that. So for instance, I don't know, Taylor, what might be sort of a decision that a company might be thinking of making and that it might model out using different scenarios in a model like this?
Well, I mean, either the first two would be growth rate and churn rate.
Okay, cool. And so, I don't know, I guess there might be a scenario in which growth rate might be significantly higher or something. And so we can make a scenario for higher growth rate. And now you can see that listed here. And now we're sort of inside the scenario, and we can change these numbers and they'll only be applied to this particular scenario. And so maybe in this case, in the higher growth rate scenario, I know maybe we're spending a lot more money on marketing or something, and we think the growth rate is now going to be, say, 20 to 25%. And maybe we think the churn rate is going to go up slightly as well, just based on sort of lower quality of the people coming in. So maybe we'll increase this to, say, like 5 to 8%. So we can kind of change this. Once again, you'll see that some of our charts and things have started to change. Now our MRR in the table is sort of showing different numbers for the self-serve and enterprise, and this is broken down by whether it's in the higher growth rate scenario or not. So you can see that these numbers are different. Likewise, with our subscribers chart, it's now showing all the different scenarios for this thing. Once again, we probably don't want to show that much complexity on a single chart, and so we can go in there and basically tell Causal which scenarios we want to see. And so in this case, maybe we just want to see the active scenario. So whichever scenario we're currently in, we don't want to see all the scenarios for these two variables. And so we can go into the chart options and delete those and just say we want to see the active scenario. It's typically never a good idea to have too much going on in a single chart, and it kind of makes it hard to understand. So cool, we kind of have a simple model now. Our dashboard hopefully looks a bit more interesting, and people can play around with these different numbers when they're trying to understand our model. In terms of actually sharing it, we have permissions, a bit like Google Docs, where you can invite specific email addresses. I'm currently on Lucas's account, so maybe I'll invite myself, and I want to give myself edit access to this model so I can actually go in and edit things, and so I can send myself an invitation. And now I'm a user of this model, and I'll see it in my own dashboard when I log into Causal. And if we wanted, we could also let other people make a copy of this model by cloning it as a template. And so now in the presentation mode, there's this use this template button, which other people can click, and it will automatically make a copy. Taylor has been very kind and helped us set up a bunch of different templates for different kinds of businesses. And I guess you can check those out in the templates section on the website. But that's basically it for the brief product demo. Taylor, is there anything I might have missed? Anything you think might be interesting to run through?
Not missed per se, but I think what was interesting is how quickly you went basically into the scenario side. Meaning that you asked the question like dimensions, like how do you kind of create like multiple dimensions, break data out into different things, and you typically copy and paste different things. And coming back to one of the earlier questions in terms of how you understand ranges and understand scenarios, that's usually a fairly hard thing to do. Like we'll have to copy the entire model, create multiple instances of it. Like it's very easy to just change the numbers and see how the results. It's very hard to create multiple instances of it and then show up the variation between them. It's just a hard thing to do to kind of do. And so it becomes a difficult thing to do. And you in a couple of seconds basically create additional scenario and the charts automatically kind of showed it, right? Like, and the charting thing is also an interesting thing to say is like, going back to like one of the earlier questions you asked about things to remember in models is that oftentimes people will build models and it basically is like a wall of numbers. And for someone to kind of understand like the output of something that's coming from it, you almost have to, like, unless you as a model creator point someone to like exactly where it is or create summaries or charts or representations of the data, somebody doesn't know what to do with it, right? It's like a bunch of stuff, right?
Yeah.
But that visual aspect of displaying the charts is like front and center in terms of the output, in terms of how you kind of create the model. and creating a chart could take you like a couple seconds. And then creating the scenario-based chart comparing the scenarios is already built, right?
Yeah.
And that's something that you can do in Excel, but that most people struggle to do. And it's a fundamentally harder thing, so there's a lot more time to do. And so, like, I think for you, you build it really fast. Like, and for me, like using models to have, like back to the point, like using models to have a conversation on what's going to happen, the ability of you to kind of use the dimensions and the scenarios part makes it much easier to kind of create those multiple instances to think about how the variables, how the business changes based upon it. I mean, this is a simple model with a couple like fairly simple variables, but you get very detailed and complex in terms of all the things you want to do. And I guess that's the one thing I just want to point out. It's like in spreadsheet, that's a fundamentally harder thing to do that you're able to do in fairly fast here. And you're able to kind of get past that point of like actually building it towards understanding it or analyzing it.
Could I ask a probably oversimplistic question? Why is building models in this way useful and probably essential for venture stage companies in the point of view of from the investor standpoint, but also from like the founding team point of view?
Well, so if I can take a first crack at answering that, I think it's because from an investor perspective, you're trying to understand how somebody understands their business. And so being able to build a model like this allows you to kind of quickly change variables, change inputs, understand impacts, understand things. And for me, like being able to also like, I know that like if a company puts a model up to me and have a growth rate, one of the first things that I ask myself is like, well, what happens if the growth rate is different, right? And there's a quantitative answer to that of like how to be different. And there's also like, how would you scale the team differently? How would you do that? And the quicker you can change numbers and see results, the more time you can spend on actually like thinking about the business. And like, I think that's kind of like the real thing about it is like, there's no one thing that's going to exist in the world. And so models becomes like a model like this, the easy use of it becomes a way to kind of like think about what's actually happening. And that's like, I think to me, that's like really the most like important part to it. And you can get as detailed and complex into the understanding all the different kind of variables you want to, but it's the ability to kind of see the ranges of outcomes in as much detail as you really need to. That is like the most, I think, the valuable, most valuable part of it.
Got it. Probably also for Tamer, I know this is actually obviously your business, but you've obviously been through a period of raising money for Causal. How have you seen the feedback from potential investors after, I guess, you've built models for Causal in Causal?
So we raised money at a very early stage. We raised a pre-seed round in sort of September last year. I think at that point we had maybe like a handful of beta testers, of which Taylor was one of them. And so we actually didn't need to build any models during our fundraising process. I think at that stage, investors are more looking at things like, how big is the potential market for this business? Do the founders seem legit? Have they made like reasonable progress in the period of time that they've been working on the business? And so it wasn't like a very numbers driven fundraise, but we've definitely seen, so from our own customers of Causal, we've seen companies at like seed and series A and even series B stage who've built fundraising models in Causal, which they've then shared with investors. And the feedback we've gotten from them is that the investors, pretty much like Taylor said, the investors really like the sort of interactivity of being able to go in and actually play with numbers in real time. Whereas, if a founder hands you a spreadsheet that has like 6 different tabs or something, I guess it takes a lot more time to figure out how it works, figure out, okay, what are the numbers I'm allowed to change? Will that accidentally break anything? Things like that. And so we've kind of found that it's a bit easier to communicate models the Causal way rather than via spreadsheets. And
you can do that in a spreadsheet, but it just takes a lot more forward planning in terms of how you kind of structure things and how you communicate things. And that's a hard, I think a lot of that is basically pre-built into the design structure of using an app like this. And so that's the one part that makes it a lot easier. It kind of like the design structure of how Causal presents the inputs and the outputs, like pre-builds in some of the ideas of building good spreadsheet models basically around that. And it just creates like a much higher, quicker like on-ramp past it, I think.
And I think they probably also appreciate the time save as well, just to be able to see everything and go, oh, okay, this is like really convenient. This is ideal. Almost like, whenever you try out a new piece of software and you kind of get that moment where you're like, oh, wow, this is awesome. we've got a couple of questions. If we could answer those. First one is from Ali. Can you create tornado charts to show sensitivity analysis results and interaction of results?
Oh, thanks for the question, Ali. The answer is not quite a tornado chart, but we do have a sensitivity analysis feature. So for the uninitiated, I suppose, the idea of a sensitivity analysis is basically to try and understand which variables in your model are the most important with respect to a given output. So, you know, if this is our business, maybe the thing we care most about is MRR, and we might be interested in seeing, okay, you know, should we try and increase the growth rate slightly to improve our MRR, or would it be more valuable to decrease the churn rate slightly? You know, you're trying to understand which variables are the most important. And so a tornado chart is one way of visualizing that. In Causal, we have our own sensitivity analysis feature, and you can just select the variables that you care about. So in this case, we might want to see how MRR is affected by the growth rate and the churn rate. And so we can just select these three variables, and we can create a new sensitivity analysis chart. And now what Causal is doing is that it's crunching a bunch of numbers, and it's telling us what the relative importance of these two variables are. So I wouldn't pay too much attention to the specific percentage, but it's basically telling us that the growth rate based on the ranges that we've defined is much more important than the churn rate at the moment. And so if we can like increase the growth rate, it'll have a bigger effect on our business than increasing the churn rate. The only thing to bear in mind with this is that it does heavily depend on the ranges that you've defined, just by the sort of underlying mathematical method that Causal uses to get these numbers. And so you just need to make sure that the ranges you've defined are actually plausible and as accurate as possible for this result to make sense. But yeah, this is the sort of sensitivity analysis feature in Causal. I think there was another question on the end of that one, Tom. Was that like?
Just about the interaction of results.
Okay. Yeah. So this kind of takes interactions into account in the method. Yeah, I think going into the details is a bit fiddly. It's basically a fairly complex statistical method. There's a Wikipedia page explaining it, which folks are free to check out. But I think in general, a lot of what we're trying to do with Causal is reduce the sort of the level of technical knowledge you have to have in order to be able to use sophisticated concepts like, you know, probability distributions and sensitivity analysis. And so we've tried to be a little bit opinionated about the sort of default things that we show and the default assumptions that we make, just to make it a bit easier for you know, less technical users to actually be able to use these concepts. So yeah, hopefully that kind of helps.
Nice. Another one from Pratap. Great demo. Love the simplicity. I noticed your variables and scenarios auto-populated additional options in the drop-down as you started typing. Where did those come from, and are they available to all by default, or is it just bringing in variables you've previously created?
Got it. Yeah, that's a good question. So essentially, whenever you are writing a formula, maybe we'll look at one of these formulas. Causal basically knows about all the other variables in your model. Actually, if you focus inside a formula box and you click this lightning icon, you can see basically everything that Causal knows. And so it has variables, and so it has all the different variables that we've created. All of these things are things that we created. It then also has some additional variables that help us do stuff with time. So you can get, you know, the total number of time steps in your model. In this case, it would be the total number of months. So this would be like 36 or something. You can get the current time steps. So you can say, you know, if time steps equals 1, then do this, otherwise do something else. Or you can write things like, you know, if month equals 12 for like December, then do this, otherwise do something else. So we have like all the variables you've created plus some of these helper variables. And then we also have a ton of different functions, a bit like a spread. You know, Excel has different functions to do different kinds of calculations. So we have a bunch of different finance functions that sort of save you from having to write out crazy formulas. And then we have, you know, basic mathematical functions like, you know, finding the minimum of 2 numbers or rounding numbers up or taking logarithms and things. And then we also have a bunch of different probability distributions that you can use if you do have the sort of statistical knowledge about kind of exactly how you want to model things. And then finally, we have just some recipes, which are sort of predefined formulas that let you do certain things. So this lightning bolt symbol can kind of give you an idea of everything that's available.
Nice. Any other questions for Taylor and Tamor? We've just buzzed through an hour. So if there's anything else you'd like to ask, then fire them in the Q&A. But yeah, it's good to see now seeing kind of Causal for the second time, just thinking about all the applications that we could use it like internally for our business. And I think there's really a lot to be said. Just, I know we kind of glossed over it previously, but the integration with like Stripe and Xero as these kind of come more core to everybody's business, especially like a modern day business, everything's kind of plumbed through, if not those precise services, but a service very similar to them, then you can kind of get a lot of the way there in terms of useful metrics on your data just by putting these two in and knowing having some basic skills in Causal. Would that be a fair comment to say?
So my internet actually died, so I missed most of what you just said. Maybe Taylor can comment on whether that was a fair comment.
Well, no, I mean, it's true, right? So like pulling data feeds into those things is actually fairly hard to do in most spreadsheets. You can usually do some stuff with some add-ins for Excel, Google Sheets, basically pre-built to pull it in there. It actually makes it really good for like data analysis, right? So you can do really quick data analysis around pulling your data from your transactions from the kind of external sources to do analysis around those things. It makes it actually really easy to do. But also to do like the actual base reporting on it, it's like a pretty powerful kind of way to do that. Yeah. I actually think it's also one thing you kind of like also kind of talk about is the kind of communication and presentation of the model, the ability to kind of display it on the web, but also embed it in other places as well across the web, makes it a tool, like almost like an interactive tool for people to use to either you can keep it private, also kind of make it public in a way. I think that's a pretty powerful way to kind of collaborate and at least like share around how to think using models.
Yeah, I think it's a good way to just bring more people into the fray in terms of actually internally know what's going on and whether like this is our current growth rate, and if we can get up to this growth rate, just have that conversation, whether it's like an internal wiki or an internal site page, or also obviously communicating out to investors, or even like communicating out to say some like early backers of the company or some like core members of your community, to just this whole like building in public thing and people like sharing their metrics and stuff. So yeah, I think can be applied in so many different ways.
Sure.
Yeah, big fan. Any final questions for any of the gentlemen? And if not, we can go ahead and wrap it there. We've actually got a third session coming up in a couple of weeks or so. So I'll be sharing those out with everybody. So if you signed up to this, keep an eye out for that one. We'll be coming back with more Causal sessions soon.
Awesome, cool. Well, Tom, thanks for having us. Taylor, thanks so much for joining and sharing your thoughts and insights.
Absolutely.
Yeah, thanks for pulling it together.
No worries. Thanks everyone for coming. The replay of this will be up on the site ASAP, and yeah, see you all again soon.
Awesome. Bye-bye.
See you later, guys. Bye.